Welcome. In this video, we will see if XCN Coin can be 2.5 cents. Please watch to the end to understand. We see that the bullish engulfing candle, which we analyzed in detail in the previous video and considered a strong buy signal, closed without breaking its pattern. This is an important development because the close of a strong bullish engulfing candle usually indicates that buyers are dominating the market and an uptrend is about to begin. Currently, the next candle is colored green. This reinforces the effect of the bullish engulfing candle and shows that the market is gaining upside momentum. Since the bullish engulfing pattern usually closes by engulfing the entire previous red candle, the green candles following this pattern are crucial for confirming the uptrend. If the price stays above the body of the bullish engulfing candle, and the new candles begin to close in a bullish direction, then we have a clearer confirmation that the market has reversed direction and the trend has turned upwards. Bullish engulfing patterns, especially at strong support levels, are considered one of the most reliable indicators of trend reversals. This bullish engulfing candle is made by strong buyers, so the red candle is small next to it because of the high buying. On the chart, we can see that the falling trend line, which has been effective for a long time in suppressing the price, is still valid. The price continues to move in the lower zone of this trend, encountering resistance and pullbacks at every touch. This suggests that sellers are still active in the market and the price is struggling to make an upside breakout. However, the more the falling trend line is tested, the more likely it is to break. One of the most important things to consider at this point is how the breakout will occur. If the price breaks the downtrend with a bullish candle and closes several candles above it, we can say that the uptrend is on firmer footing. In this case, we can see buyers gaining strength and sellers weakening. However, if a breakout occurs on weak volume, this could be a misleading move, and the price could dive below the downtrend again. And with a bullish engulfing candle forming below, it is possible that this downtrend could be broken and a retest would be needed after the trend break. Analyzing the price action, we can see that there is a distinct bullish order block just below the current level. This is an area where the price has been supported by strong buyers in the past, and upward movements have started. If the price moves down from its current level, it may reach this bullish order block and may be able to react upwards again with support. Since there have been strong buy orders at this level before, there is a high probability that buyers will re-engage when the price falls back to this area. This may cause the price to remain sideways here for a while or experience a quick rebound. However, the most important thing to note here is how the price got to this bullish order block. If the price falls in a slow and controlled manner, the probability of a strong reaction in this area increases. But if this level is reached with a wave of hard and bullish selling, the support of this bullish order block may not be enough and the price may have to test lower levels. It is also important to watch the reaction of the price once it reaches this order block. If high volume buying occurs here and long wick candles form, we can say that this area is a strong support area. However, if the price breaks down here without a pause, we can consider that the order block is no longer valid and the bearish move may continue. And the less contact the order block has received, the stronger it is. In addition, one of the critical areas that the price will face in the event of an upward movement will be the bear order block on the upper side. This area is notable as an area where strong sellers have stepped in and pressured the price downwards in the past. If the price continues its upward movement and reaches this order block, there is a high probability that the sellers here will re-engage. So, when the price approaches this zone, the strength of the sellers versus the strength of the buyers will be a decisive factor. If the selling pressure is too strong, the price will retreat sharply from this level. Therefore, candlestick patterns and volume movements will be very important once the price reaches this zone. If there is a sharp selling wave and large wick candles are seen, we can say that this order block is working as a strong resistance. As soon as this downtrend is broken, the price will want to go to this bearish order block. One of the most important structures on the chart is the descending wedge pattern. This pattern is often regarded as a trend reversal signal, and a bullish breakout can reveal a strong bullish potential. As of now, the price is moving in the narrowing area of the wedge pattern and is close to the upper line. In this type of pattern, as the price continues to narrow, the squeeze increases and the volume starts to decrease. Usually there is a sudden increase in volume during the breakout, which contributes to a stronger uptrend. The important point here is to observe whether there is a clear break of the upper line and check whether the price tests this level as support after the breakout. If the price shows a rapid rise after the breakout, it may accelerate up to the bearish order block. However, it is worth being cautious as a definite breakout has not yet occurred, For now, the price should not move below the lower support line in order not to break this pattern. We should wait for the breakout of the upper line. When we look at the RSI indicator, one of the most important details we notice is that a significant support level has formed. This support level has been tested many times in past price action, and each time it has led to an upward price reaction. So it is possible to say that the market has formed a strong base in terms of RSI. Especially when we examine historical data, we see that when the RSI reaches this level, it usually shows a strong recovery, and the price moves upwards in parallel. As of now, the RSI has reached this critical support level again, and seems to have started to move upwards by taking a reaction from here. If this support point works once again and the RSI continues its upward momentum, it is quite possible that we will see a similar bullish trend in price movements. When we analyze how the price has reacted in similar situations in the past, there are many examples where RSI rebounds starting from this level have moved the price upwards. If these examples repeat, the probability of the price rising will be quite strong. However, there is a very important point to note here: whether the RSI has made a strong reversal at this level. Because although this support level has worked many times in the past, it is important to remember that there is no certainty in the market. If the RSI continues to move up from this level with strong momentum, and one of the downtrends is broken, this could be considered as an additional confirmation signal supporting the uptrend. However, if the RSI fails to react adequately at this point and continues its downtrend, a break of the support level may be possible. This could put pressure on the price and lead to further selling. For this reason, it is very important to carefully monitor whether the RSI's reaction here is sustainable. If it gains a strong bullish momentum, this would be a positive signal for the market. Especially if we see the RSI moving up again and breaking the previous resistance levels, we can say that the price may also move in this direction. And when the RSI makes a nice rise from here, the price will break the downtrend. When we look at the MACD indicator, we see that a crossover is about to take place on the lower side, below the zero level. The MACD line and the signal line are getting very close to each other, and we can say that we are at a critical threshold. If the MACD line crosses the signal line from bottom to top, this will be a very positive signal for the market. Because when historical data is analyzed, it is observed that the MACD's upward intersections below the zero level usually bring a strong bullish movement. Especially when we examine past price movements, there are many examples where the price accelerated and entered an uptrend after the MACD's upside crosses below zero. Such crossovers are usually considered a trend reversal signal and indicate an increased appetite for buying in the market. If this crossover materializes, we could see price action testing higher levels in the coming days. However, there are a few important factors to consider here. First of all, the MACD crossover should only be considered as a signal and does not by itself guarantee a bullish breakout. So it's important to confirm whether there is a strengthening in price action along with the MACD crossover. In addition, the MACD also needs to cross the zero level after its upside crossover. This is because usually the strongest uptrends occur when the MACD crosses above zero after crossing up from below zero. If this happens, it will reach the 2.5 cents level very easily. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.